Hello everyone, my name is Ajmerdeen and welcome to my channel Analyze with Ajmerdeen. Today, 21st November 2020, and it was examination of financial reporting for old and new course for November 2020 examination. And let me come that today in this video we are going to discuss about how was the exam paper. And before going through this paper, we have the before coming back to the question paper, let us discuss the guidelines and SOPs followed. So in some of the exam centers and whereby I visited, there was a strict guidelines, temperature checking on the gate, and then again sanitization etc happened. So overall it seems to be a strictly follow up of the guidelines. Everyone was wearing mask. Coming back to the occupancy level, so there were very less students in the exam hall, and if I can estimate, so it was only 30 to 40% candidates who came and gave the examination. In some of the hall, maybe like 20% was the occupancy. So uh, overall students were very less who came and gave the examination today for the financial reporting. So it is overall a good thing. If you were prepared and you gave the examination, it is all fine. If you were not prepared, or some other conditions which were mentioned by the ICI, so it is okay to not to give the examination and skip for the January February examination cycle. Coming to the paper, we have old course CA final exam paper with us. So also I want to appreciate all the staff who were coming and all those candidates who were shown their bravery to come and give examination. So appreciation to all those who have been there and followed the guidelines for conducting a good examination. Next thing is that coming to the question paper we have, so first A point was related to the valuation of inventory, that NRV got reduced in the subsequent year, so what should be the impact on the valuation. First B part was a fire was broken on the godown, and in the subsequent year, that means before final, not on the 31st March 2020 but on the April 2020. So what should be the impact in the financials of 31st March to be written. So first question, third part was related to a company entered into sale agreement during the year, but the actual delivery of goods happened on the next year, subsequent year. So whether the contingent income to be recorded or not. And fourth point was related to the government grant which was received during the year but subsequently cancelled in the subsequent year due to violation of some conditions. So what should be the treatment as per accounting standard. These were the 4 points for first A part. Again, first B part was related to accounting standards only, and there were these three parts are differently altogether different questions and related to different accounting standards, and they were tricky as well. First part was related to the some of the unit, some of the location which is not now usable, and lease agreement to be cancelled. And if lease agreement is cancelled, then we need to pay some amount of 6 months rental as an penalty. So what should be the accounting treatment on the books of accounts for 31st March 2020. B part was related to a case, a suit was filed against the company, and company is expecting that we will win the case, and some kind of penalty, some kind of professional charges they have incurred during the year. So what should be the treatment. And third part was uh, uh, related to the supply of a good of worth rupees 1 crore, which was supposed to be happened, and which out of which 30 lakh good happened to be lost due to accident. And now the contingency is about 15%, which is sure shot penalty we need to pay. So provision whether it need to be accounted for or not was the question here. Now C part was related to the cash flow statement, and finally after a long time cash flow statement question came, and operating activities cash flow was required to be made. Next question was related to, first D was related to again valuation of inventory, and here trick point was that when the finished good net realizable value is less than cost of that good, what happened to the valuation of inventory, that is raw material. So these were points which need to be taken care of while attempting first D. Coming to the second question, it was related to preparation of balance sheet after merger and accounting adjustment. It was quite normal question. There was no relatively any tricky point. Third question was related to the consolidation of balance sheet, and consolidated balance sheet need to be read. Full-fledged question was related to CF CFS. And next is fourth question. A part was related to major differences, not major differences, major changes which came across on AS2 related to machinery spares, subsequent assessment of net realizable value, and cost formulae. Next, fourth B part was related to investment property, and in the one definition, the whole question 5 marks came, and 4 points were given, and whether they met the criteria of investment property or not as per IndAS 40 was to be mentioned here. Fourth question C part was related to compulsory cumulative convertible preferential. Here the tricky point was that cumulative point was there. So now there can be two alternatives, that one may discount each cash flow of 1,60,000 yearly, or they accumulate that preference share dividend and discount in the factor of year number 6. So these were two alternatives. Please let me know what you have planned in fourth C point. And then equity component and the other debt component was to be taken care. So this was a little tricky question, fourth C. Coming to the fifth question, it was related to the full-fledged question was related 16 marks to goodwill and the intrinsic value computation, and this was a long question, yet it was quite a happening that if you have prepared goodwill chapter in a good go, then this was a catch for you. And there was a little tricky points. For example, if I say there was bad debt point was there, where the book value have shown the net amount of trade receivable, and 5% was already taken care of. So these all things you can say that it was tricky, but altogether it was a good question, and it was comparatively good question to attempt for the 16 marks. Coming to the sixth question, A part, it was related to ESOP plus the mixture of ESOP and your EPS and diluted EPS calculation. It was again a simple question, and it was a catch of 8 marks if you know how to calculate ESOP costing, and of course the dilution was the thing here. 8 marks was for the ESOP plus EPS question paper. Coming to the sixth B, it was related to your NOPAT minus NOPAT means net operating profit, and NOPAT minus WACC into your profits. So it was related to calculation of economic value added for the company. Here financial leverage was given, so financial leverage is EBIT divided by EBT, so there you can calculate EBIT, and therefore you can calculate NOPAT as well. Coming to the seventh A part, and the sixth B was also for the 8 marks, so comparatively a shorter amount of time to be taken for these two questions. So sixth question was little time saving as we compare to the other questions. Coming to the seventh A, it was related to the timing of revenue to be recognized, and quite a simple questions. 4 parts were there for 4 marks. And coming to seventh B, it was related to net owned fund calculation. It was not any kind of provision calculation. It was related to the net owned fund calculation on systematically important non-deposit taking company and deposit taking company for direction 2016 as per. So net owned funds to be calculated in the 7th B. Next question was 7th C was related to calculation of NAV, and it was again directly from the book, and I believe that it was also mentioned in some of the RTP as well. So this question 7C was quite an if you have attempted it, it was a quite easy question. If NAV calculation, simple calculation, no tricky point over here. And next was again related to the fresh amendment, which was IndAS 116 on leases, and it was two parts were there. First of all, lease and sale and leaseback transaction, the treatment on the sale and lease back transaction, and also second part was related to the classification of leases. As we know that in IndAS 116 there is no particular classification, for example finance lease or operating lease. There was this, the fundamental of classification is not there in the IndAS 116. And seventh E part was related to your prepare machinery account. So here revaluation related issues were being asked in 7th C. So this was the overall question paper. If I've read down all the questions in a brief form, I believe that you have been noticed that comparatively it was okay to attempt if you are conceptually good at accounting standards and your recent amendments, for example your IndAS 116 and AS 19. So overall question paper was quite a good, little time taking, but some questions were there which were time saving as well. So overall it could be attempted in 3 hours. And thank you very much, and please let me know about your feedback of the question paper and suggested answer. We will upload it on my blog. The link will be given in the description box. Thank you.